Welcome to TradeTheNBA.com. This is John's reports for the 3rd of February. Went pretty much as expected. We ended up with that brief softness as soon as the magenta came over yellow. We had the strong dip of DOC, so both matching from alongside. And sure enough, we knew that the supports were going to hold given what we saw from the broader readings. Now, when you convert that into the daily, it just looks like pretty much the same going across, though this should be enough to break into slightly new highs because, again, while you have the fear and the terror, which causes these down moves, at the end of the day, you still have strong investment, a resilient economy that's moving just fine, and yeah, your valuations are at premiums, but what else are you going to do? I mean, interest rates aren't looking to really climb, but nor are they going to drop. So you're kind of stuck in that malaise too, and that's also where the Nasdaq and everyone is looking to growth. Of course, that's been AI, and it's going to continue to be the focus. But you can see from a Treasury standpoint, and really nothing happening. I mean, you get these brief concerns about global things, but you'll notice how as soon as the market was suffering a bit, all the rhetoric of Greenland, everything else just died down into nothingness. And of course, the cooling even of Iran situation causing a significant pullback in oil. Um, but yeah, that's still problematic because it's not that helpful because you got a long way to go. You're still, you know, way outside the range that you need. You need to be in the low 50s, and that's not where it is. And the longer it stays here, the worse it gets. So it just slows things. So, and I think they're realizing the midterms are a big problem, and it's not getting any better. But they also realize euro, crypto, all of them problematic. You're not getting any bonus from any of those. That just leaves commodities like gold in that to give you your opportunities. And after the big sell-off, of course, nice rebound for gold, and that silver was a little bit less so. But that was a healthy pullback because you filled in all the positive extremes from the original breakout very nicely. So that's exactly what you want. You had a similar version right here. Uh, Similar construct took place. So nothing really that different from them. So intraday, it was pretty much straight from the open there. The European session built up a little bit of it. You had a brief pause, and then it was just take off. So that was a nice move for call buyers. It means you're going to have some mean reversion just to soothe things out later in the week, probably. But for now, I think that pretty much the fear factor has faded for some people. And again, once that fades, you have the new fund money, it's all going to be piling in, so they're front running that a little bit. So you may see some selling into tomorrow and the day after, just as the fund money starts to roll in and they've got to put it somewhere, and they don't want to get caught too far behind thinking that they got some kind of a deal because you're back up over the 7,000 on the ES again. So that's the long and the short of it. There's just a lot of chop, and that's exactly what we expect at this particular time because I still think the bias is upward with it, but doesn't mean you're not going to have significant moves, and we can follow it pretty easily with the indicators. So that makes it simple enough. As always, trade well. Anything relevant, I'll put on our team chat.